Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased you have joined us for our next live presentation from Lowell Farms. Before I introduce our speaker, a few points to note. Please submit your questions in the questions box to the left of the slides. All of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome George Allen, Chairman of Lowell Farms, which trades on the OTCQX Best Market under the symbol LOWLF, and on the CSE under the symbol LOWL. Welcome back, George.
Hey, great. Thanks for having me. I appreciate KCSA putting this together for everyone, and grateful to be back this year. So thanks so much. Let's dive in to the presentation. We've got a lot to cover today and some new content. We've been busy behind the scenes working on our new product launch, and I'm excited to share some of that with investors today, the Intrepid group that's joined us today. So thanks so much for everyone hopping on with us. Let's dive in. So my name is George Allen. I serve as chairman of Lowell Farms. If you don't get a chance to download our presentation from our website, please do. There's important information in the safe harbor disclaimer statement that I'm not going to go through and read at this moment, but it is important for investors. Just company snapshot. If you don't know the company, we're a California-based operator. We operate in 4 segments in California. We have CPG sales, which is the preponderance of our revenue. That's a product that we sell into California to dispensaries on a wholesale basis. We have out-of-state licensing. That's where we take our most popular products and we license them in other markets today. Today, we're active in Illinois and Massachusetts, and we have planned expansion for the balance of this year into 2 new markets, which I couldn't be more excited about. We'll talk about that in a little bit. We have a business that we call Farm Services. This is where we support other cultivators in the market with post-process harvesting or post-harvest processing. And that's a service that we see a tremendous amount of opportunity around as California cannabis takes a more prevalent role in cannabis cultivation in the future. And lastly, we have a business line that we call bulk flower sales. That's basically where we sell our excess weight coming out of cultivation into the bulk market. We're listed on the CSE as tickers are outlined, $55 million of LTM revenues and an enterprise value today of a whopping $27 million. Let's dive into the presentation. So we talked about the 4 components of our business, but basically we are focused on CPG, brand licensing, where we take our brands into other markets, bulk flower, and farm services. So I think it's important for all investors to understand what's happening in California. I think if you follow it closely, these are not numbers that are surprising to you, but more broadly, it is definitely a headwind that our entire industry is facing, not just California. Specifically, California sales are down 16% from the peak, which occurred in the middle of last year. All categories are contracting in California, with the minor exceptions of pre-rolls and beverages. Pre-rolls have risen in terms of share from 14% over the 16 months, and that's relevant for us in ways that we'll outline in just a few minutes. Flower contraction is almost entirely attributed to the decline in price and excess supply marketplace. We have seen a unit volume drop off of about 2%, but that pales in comparison to the sales drop off of about 19%. I think we attribute the unit drop off to post-COVID peak levels of cannabis consumption during COVID. But I think more broadly, the relevant message here is that as prices have declined from oversupply, there hasn't been a consumer demand response. Either the consumer demand response was muted by the COVID normalization, or there hasn't been a demand response. And I think that's leading us now to what we think of as a severe shakeout period among California operators. Now, in this shakeout period, we're watching sort of 4 strategies evolve among the marketplace for threads of survival. And the first is that we're seeing operators really choose to focus on cost leadership. That's basically winning by economy of scale and trying to drive marginal cost below the survival unit economics of your competitors and play the waiting game. We see a number of operators trying to do that both in manufacturing as well as most prevalently in cultivation. The second strategy that we witness a fair amount is the idea of vertical integration, driving a retail first strategy with margin capture with upstream product production or manufacturing. We see a lot of operators embracing this strategy as well out there in the marketplace, and certainly one that we've contemplated several times over the years, but we've never chosen to go into competition with our customers. Today, Lowell is a third-party manufacturer and distributor of products, meaning we make products that get sold and distributed across California. And we don't play favorites with stores that we own because we don't own any, as opposed to trying to consolidate our own demand in the marketplace. I think the two strategies that we're most focused on are number 3 and 4 on this page. The first is differentiated products, which is trying to break away from the commodity paradigm. And frankly, of the operators that I look at and aspire to be in the marketplace today, the very few operators that we see that are having success in this challenging marketplace are those that do have a product that breaks away from the commodity paradigm, meaning they're able to charge a premium price point and they get a disproportionate amount of share because their product is so broadly accepted by cannabis consumers. And then the last strategy is essentially leaving California, leveraging your California brand authority and authenticity to enter into new markets which have less competitive dynamics. Now, we've only seen a very select few of operators capable of embracing these final two strategies, and we are steadfast in our belief that Lowell is one of them, and that's why we have tilted our entire operations towards those. So I'm going to pick up the pace here because I really want to talk about our 35s launch. But basically, if you look at our revenues today on a GMV adjusted basis, which is, you can read the details on GMV adjustment, but our Lowell pre-rolls make up about 36% of our revenues today. And that is entirely the focus of our expansion. We think that those products are differentiated. We see a consumer that is not only loyal, but somewhat price indifferent on those products. And so our view is our strategy is to try to embrace and to compound the success of that product line in an otherwise challenging marketplace. You focus on what you're doing well when times get tough, and that's by far our biggest strength as a business. So, for those that don't know it, it's important to go back and understand a little bit about our history. Lowell was one of the first brands that really embraced cannabis as something to be proud about. They did so with an iconic pack. We did so with an iconic pack that was introduced in 2017 as really one of the leaders in the market. It was one of the first products that encouraged the consumer to brag and show off their choice in cannabis. I think a lot of cannabis innovation to date has been focused on products where the consumer is really allowed to enjoy cannabis in a way that they hide cannabis, the vape pen or the edibles, really about private consumption. Lowell was a brand that went in a different direction, and it went in the direction of, this is a brand that we want you and we encourage you to be proud of cannabis. And that has catapulted our business to being the number one all flower pre-roll in California. We command today about a 5% market share of the pre-roll market. But we're not settling for the status quo. And I think the real important thing here is to understand why, what are the shortcomings in the pre-roll market. During COVID, we spent a lot of time looking around at our competitors in the marketplace and at consumer behavior. And we noticed that pre-rolls weren't doing as well as they should be doing. And part of the reason for that was that they were too big. They also were packed too tight. They had product deficiencies, and that they didn't really compare to the product experience of rolling your own joint. Our product did compare favorably against the prospect of rolling your own joint, but our price point was substantially higher than the underlying flower. And that's because it was such a manual process. So we spent a lot of time really contemplating the opportunity. And here's the opportunity. A lot of people don't like to draw comparisons between cannabis and tobacco for very obvious reasons. But from the narrow use case that I'm employing here, I do think it's relevant. Cannabis flower sales today outpace pre-roll sales by approximately 3-1. And in tobacco, that ratio is inverted, where pre-rolls or cigarettes outpace loose tobacco by a ratio of approximately 15-1. We really want to understand why is that. And I think it's super important for us to understand it. For us to get consumers to change over from flower into pre-rolls, it's not enough to just give the consumer a better product. It has to be the classic innovator's dilemma 10x times better. And so that means winning on convenience, always being there at a moment's notice. And that's a critical component of our new product. It also means winning on price. And to do that, we targeted a price point and a product that on quality is substantially less expensive than flower. And there's a way in which we do that that's unique to us. And then number 3 is to win on quality. And this is paramount. You cannot command the audience that we're trying to get the attention of unless you deliver a product that is superior in all fashions. And that's really fundamental to the proposition behind the Lowell 35s. So let's talk about who our core consumer is. In cannabis, I think it's fashionable to talk a lot about the new entrant or the proverbial soccer mom because they're the consumer that we want to bring into cannabis. But if we're actually looking at who's paying the bills in cannabis today, the bulk of the bills are being paid by the cannabis heavy user. This is a consumer that 62% of all cannabis consumers report that they use weed at least 1 time a day. That comprises 92% of all cannabis. 46% of users suggest that they use it more than 1 time a day, and they make up 77% of cannabis consumption. That consumer, if you think about them, they rely upon cannabis in their daily lives, and they put a heavy emphasis on convenience. It's important that you think about convenience for the consumer. And that's essentially what we've done with the new 35s. Introducing the Lowell 35s, basically what you see on the page here is our new pack, our Lowell pack. It's smaller than the page suggests. It fits incredibly conveniently in the pocket. It's the smallest possible way to carry around 1/8 of weed in preparation for smoking. It fits easily in your pocket. It's an entire 1/8 of weed in the form of 10 individual sticks in the pack. This product is the result of a tremendous amount of R&D and a tremendous amount of automation that we've deployed here. And automation is really key to understanding this product. Automation allows us to keep it fresh. Automation allows us to pack it in a smaller pack. And automation allows us, most importantly, to deliver it at a price point that consumers love and embrace. The smokes themselves inside the pack are really fundamental. Number one, we designed the smokes themselves. Ordinarily, if you're familiar with the 350 milligram smoke in the marketplace, usually they're short and stubby. When we spent a lot of time looking at engineering this product, we settled on a 6 millimeter diameter, which allowed us to get to 77 millimeters in length. And the 77 millimeters in length is fundamental because it allows the consumer to light the pre-roll without burning their nose. Believe it or not, we've done scientific research on how long a pre-roll has to be for you to light it while it's in your mouth. If you ever lit in a short and stubby pre-roll, at the very best, you suffer from crossing your eyes, and at the very least, you've got burn marks on your nose. So we designed the pre-roll here to be long enough so that it could contain the dosage that we wanted to target, which was 350 milligrams, but to do it in a long enough stick. And that was really fundamental. We also spent a lot of time on the paper. The paper is really essential here. I think conventional wisdom would have suggested just going with cigarette paper. The reality is that cigarette paper burns hot, which most cigarette smokers don't notice because they become accustomed to the heat over time. But we went with a cooler burning ultra thin hemp paper. And the reason why ultra thin is super important is you don't want the weed, or you don't want the paper to overwhelm the taste of the actual cannabis inside. And lastly, always rolled. Rolled is fundamental to the process here. It does the least disturbance in terms of the cannabis itself and pushing the terpenes and the oils out. Next is really important, is equally important to the smoke itself, is the pack. And the pack is really important because the pack allows us to achieve a new level of freshness in cannabis. And freshness is what that core consumer is most yielding. They're searching for a product that gives them the same level of freshness as they get from rolling a joint themselves. And you can't get that in any other packaging that we've found in the entire marketplace. The reason we do it is we seal it. We seal it immediately from the moment the pack is made. And we pack the flower into the pre-rolls within just a few days after the cannabis has been cured. This gives us a product that not only is small and compact, but the moment that you tear open the pack and the moment you tear open the foil, you can smell the freshness coming out of the product. That initial impression that consumers get from this product is an essential part of the user experience. Now, behind the scenes, as I said, this product has taken a lot of work for us to get to. It's taken years of R&D. We first set down this path during the very earliest days of COVID. We've made a large investment into automation. It's not one piece of equipment or not even two pieces of equipment that make this. There's a large array of equipment that we use all the way from the moment that the product is harvested, a wet harvest, we call it, at the cultivation facility, all the way into getting into the pre-roll itself. And the reason for that is it allows us to reduce the unit economics, but it also allows us to deliver an entirely consistent product. When you start changing a human intervention in the assembly of a product, you get a much higher instance rate of variability. And variability here is the enemy of consistency. So we're going for an entirely consistent product. Consumers don't like the idea, after intense polling, they don't like the idea of putting any product in their mouth that they are certain that another person has placed their hand on it. This product has never been touched by a human hand. It goes all the way from the dried cannabis state all the way into the cigarette pack or into this pack without ever being touched by hand. And that's really fundamental. We also use our proprietary effects-based blends that we've been propagating for years in our core Lowell Smokes pack, and we have statewide distribution that we believe is second to none, and frankly a brand that represents the pinnacle of quality in the marketplace. A great place for us to start this new journey. So just talking briefly about the addressable market, I think what this page is really intended to communicate is that it's large. We see a massive opportunity not only to take share from pre-roll out there, which is a large market in the United States, but to also migrate consumers from flower. Now, when we're talking about migrating consumers from flower, it's really important to understand that the consumer who uses cannabis on multiple times a day will often migrate between form factors. And we're not trying to capture all of their form factors. We're trying to capture the form factor for them where they care the most about quality with the intersection of convenience. The moments of the day where they want to snack on cannabis, right? And cannabis consumers who rely on cannabis snacking. And they rely on the repeated use of cannabis throughout the day to achieve their level set. And that's really important. So we think that if we get this right, we're not only taking share from pre-roll, but we're also taking share from flower and to a lesser extent, the vape categories, a category which really emphasize convenience. So I'm going to turn the page now and I want to talk a lot about our launch because this is something that we were really excited about. We launched the product on September 29th across California in 16 storefronts. We wanted to keep the storefronts to a limited count in California, mainly so that we could be very active in measuring the response and the success. And we were blown away by the response that we had. We met individuals who drove for hours to come and sample the product. We met individuals that even flew halfway across the country to come and sample the product. And we were extremely pleased with the response rate. And the whole point here was to get consumers to try the product out. And we had lines around the door at most of our dispensaries for the launch time. And we had consumers who were extremely proud, both on social media and at the dispensaries we were congregated at. So let's talk a little bit about what did we learn from the launch. So since launch, Lowell, and that includes all of our pre-roll products, has captured approximately 13% of pre-roll sales in our launch stores. And that has gone as high as 19% of pre-roll sales in some of our launch stores. That's up from a base level of market share that Lowell was enjoying of 5%. So more than doubling of our market share in our launch stores. The 35s alone captured as much as 8.5% of total pre-roll sales and 2% of total sales in any given dispensary at the launch. So that was a phenomenally successful data point there. A lot of share capture. I think we blew away our dispensary partners in terms of the volume that they delivered. We had some stores that reordered from their launch inventories 3 days after the launch. Super excited about that. We also were really pleased to see that we saw minimal cannibalization of our legacy Lowell products. This product came out at a substantially lower price point from our legacy Lowell products, our legacy Lowell pack. And what we found is that legacy consumer is an extremely loyal consumer. And they were not scared away from our core product and into our lower price product, at least as of yet. And I think that's a real positive for us. So in general, what we've seen is we've brought new customers into the mix with our 35s. We also watch repeat purchase patterns. We have data sets that allow us to look at consumers and how often and how fast they come back for their second and third purchase. And that's really impressive so far. We're above repeat purchase pattern levels that we've seen on any of our products thus far, and we're approaching the best products in the marketplace. In several of our stores, we've also become the leading SKU in those stores. So a lot of success in the early launch stores with about just less than a month worth of data. Since the launch late last month, we've also started rolling it out across other markets. We're about 2.5 weeks, or I'd say about 2 weeks into our broader launch. We anticipate being in at least 100 storefronts, that's online and brick and mortar, across the state by the end of the month. And that is limited by our availability of product as well as the onboarding process. But so far, I'm extremely impressed and pleased with the work that the team has done in making this the fastest launch yet. So I'll talk a little bit about out-of-state launch. Out-of-state, we do plan on leveraging our success here and going out-of-state. Today, we're extremely active in Massachusetts and in Illinois with leading pre-roll brands there through our brand licensing program. We have a couple more markets on slated for launch. Colorado and New Mexico should be launching imminently, and we're evaluating options in Michigan and Arizona. The licensing terms are that we receive a percentage of wholesale sales, as well as we sell the packaging at a modest markup, and that gets included in our revenues. So lastly, this is something that's new for us. We have procured or we have commissioned the procurement of enough pre-roll equipment to allow us to produce 12.5 million packs of 35s annually. That's a massive amount of cigarette-style pre-rolls. And we're going to bring some of those to other markets. We haven't made decisions yet, depending on the availability of licenses and capital for us to deploy in other markets. I do think it's going to be appropriate for us to target new markets, and we look forward to doing that as time ramps up. But we have commissioned, as I say, the requisite amount of equipment and hardware for us to produce up to 125 million sticks annually, which I believe will catapult Lowell to being the number one cannabis brand in the country. So with that, I'm going to open it up to questions. Let's see, I've got I got one question that says, "What's driving the above-average demand for pre-rolls in California?" I'm gonna ask whether or not you're asking about Lowell or in the market. I think really we've seen a surge in general demand for pre-rolls in California as consumers have explored some of the alternatives that have come to market, and we've seen a new array of products and innovation, including the 35s in California. In terms of Lowell, Lowell is a brand that's synonymous with quality. You know, when you pick up a pack of Lowell's that it's flower, that it's an all flower pre-roll that we've cultivated from the end to end, and has it puts an emphasis on quality. The vast majority of product that we grow doesn't meet the quality cut to get into our pre-rolls or our flower, and that's okay. We reserve only the select best product that we grow to go into our product, and I think our consumers over time have recognized that. So then I got another question about whether or not we plan on securing whether or not we use third-party sources for biomass, and whether or not we plan on using third-party greenhouse flower. The answer to this is as we grow over time, we will outgrow our own captive greenhouse, and I think that's important for us to pass that landmark. Right now, we don't, and we have a fair amount of running room before that were to occur. But I do think we've got, our plans are not to try to keep pace with cultivation for our CPG products, as we really try to focus on what we do best, and that's bringing a product to market that consumers love and embrace. And there's right now in California, there's an abundance of high quality product out there. I do believe that we grow the best of it, but there's an abundance of quality product out there that is grown by some of the oldest and best growers in the country. And so we do from time to time procure product from them. And I think we've set ourselves up with our Lowell Farm Services business to be able to put ourselves into the process flow for securing high quality flower. So that is a big part of our strategy going forward. All right, just take a second there, read the next question. So I got a question about, can we speak to our catalyst for growth in 2023 and our capital position to support 2023 initiatives? This is a really important question. So I think the catalyst for growth that we see next year is really an uptick in demand and shift into the 35s product. We think that this product obviously has a lot more capabilities, not only in terms of taking share from the pre-roll market that exists today, but also taking share from other form factors in California cannabis, given our superiority and in price and the convenience in the packaging. In terms of superiority and price, I didn't talk about this during the presentation, but it's worth noting our pre-rolls today, the market price that we deliver our pre-rolls today, which are usually more expensive than flower itself because of the manual labor that goes in the pre-rolls. The pre-roll price that we have on the shelves today is below approximately 88% of all flower sales that occur in California. So this is less expensive than 88% of all flower sales that exist in California. So we think we've got the ability to take just a massive amount of share there from flower. It's in addition to that, it's below the price per gram of approximately 98% of pre-rolls that are sold in California. And I suspect that the 2% of pre-rolls that are less expensive than our Lowell 35s product are really trim-based products and probably don't even deserve a comparison. So I think our growth vectors really are about us improving or increasing our output capacity, which will happen over the course of the year, both with the advent of new equipment that we'll bring in, as well as the refined efficiencies that we're continuing to drive. And I think from a capital standpoint, I think capital in this industry is always an important topic, and we'll talk more about capital and capital adequacy on our earnings call, which is in a couple weeks. So with that, it looks like I have exhausted the list of questions. Thank you for the questions, and thank you for your time. I think I'm right at time anyways, so really do appreciate it, and look forward to seeing some of you directly. And if you haven't done it already, please get out there and try the product. We want your feedback. Thank you.